Good morning, everybody. I'm just gonna wait another couple minutes until some more people join, and then we'll get started. I just want to give everybody a chance to join because I know we had some problems with some people being able to get on last time. Can everybody see my screen? Okay, perfect. I'm just gonna wait another minute and then we'll get started. Okay, guys, we can go ahead and get started now. If there's any stragglers that join, they'll just have to watch the beginning of the video. I'm sure everybody saw yesterday or received an email yesterday from a program called Finmo. So this is what we're going to be using in replacement of Phylogix going forward. I'm not going to give you guys like a full training on this or anything because Finmo actually provides training for everybody. It's really comprehensive training. So they're going to go ahead and take the lead on that. There's also onboarding videos that you can watch in your portal as well. But I do want to show you guys how to connect your lender spotlight to it so that you can start using that and playing around with that as you see fit. So once you go into, like, once you create your account, there's going to be a whole bunch of steps that it wants you to approve here. Most of the time you can just click on them, review them, and say that, yes, like this is my correct license number, this is the correct brokerage address, all that. You just have to check them off and say that they've been reviewed. To connect your lender spotlight, you're going to go down into your personal settings at the bottom here and click on your account. From there, you're going to go into lender spotlight settings. Mine has already been connected, but what you would do is you'd click sign into lender spotlight and you can select a Google account to sign in with or Facebook or whatever, and it will connect you directly. It's automatically going to upgrade you to the full version of Lender Spotlight. So I know everybody's going to have access to this. Um, I will always say this is one of the most valuable tools that you can have. It's really awesome. It's good for finding all your rates. So I think this is going to be really helpful for everybody going forward. In regards to Finmo, it basically does everything that Phylogix does, but better. It's got a really nice deal flow. I think it's a lot better for the borrower. It's got a really good borrower portal. I haven't had a chance to go in and create a deal here yet, but it has a nice organization system. Like I said, I think there's training. I don't know if it's on Friday or if they're setting something else up with you guys. I'm sure Marston can confirm at some point when that training's going to be. He's the pro there, but it's really intuitive to use. It's really simple and it's a really fantastic program. So I'm super excited that everybody's going to be using it. And you can come in and watch your own onboarding videos and start playing around with it too until you get fully trained. But yeah, another thing I just wanted to share before we start going over questions, the brokerage would love it if you guys would follow and share all of their social media. So I think they have an Instagram for sure. I believe there's a Facebook account. Marston, if you want to confirm, I don't know. I know 100% there's an Instagram account. They would love it if you would follow their socials and share them as well. Obviously, we need to, growing the brokerage is a big priority. So sharing those socials with your friends and family, anybody that you know that wants to join the brokerage, it's a good way to do it. Um, it's also great for you guys to have your own social media as well. That's the biggest way you're going to market yourself these days is through social media. Unfortunately, you can't just get away with business cards anymore. You have to put yourself out there. So, working on your own social media, sharing the brokerage content, sharing your own content is super, super important. That's really all I wanted to go over to start with. I would love it if you guys had questions or things that you wanted to go over. Fingers crossed that some people do, because like I said, I just wanted to do questions, kind of a roundtable today. So if anybody has anything that they would like to talk about, please let me know.
Hey, Jenna, the with the lender spotlight from the beginning, I paid a subscription to it because that's why we're switching over to Finmo.
Yeah.
But so am I able to cancel my subscription? Are we paying? Is the
Yes,
broker paying for
you
that?
can cancel the subscription.
Okay.
It comes along with Finmo, so you can just go into
Oh,
your
okay.
account,
Yeah, I've been
like your
paying
your
for it on
account
my own just
settings.
for the access to information. So yeah.
Yeah. Yeah, me too. Me
Awesome.
too. I'm glad that we're not having to pay for that anymore because it's not cheap.
Yeah. Nope. Awesome. Thanks.
All right. Does anybody else have questions?
Yeah, hi. Can you show me how to get to lender spotlight again?
Yeah, for sure. So you're going to go down to the bottom to where your initials are and
Okay,
go into your account here.
okay,
And then on the left side here, you can click on Lender Spotlight settings. And then you should just be able to click like connect to Lender Spotlight. If you have an account already, I think it might pull up your account, like match your name or something to it, and you should be able to auto link them.
okay.
Aaron, just for you, I don't know if you're going to have to go in and cancel like your premium membership. I don't want them like double, charging you when you should have it for free. So maybe once you connect yours, just go into your settings and check and make sure that you're not still paying for it.
Yeah, I've
Um,
already connected. One thing I'd like to say is I think that if you just click the lender spotlight icon, it will ask you to connect as well.
okay, yeah, there you
So
go.
that might be the simpler way. I think that's how I did it.
Oh, this one here. Okay, yeah, that would make sense too. This is just how they showed us to do it on
Yeah,
Monday. But if that's simpler,
that's
then
the
you guys can
simpler
do
way.
that.
It'll automatically ask you.
Okay, perfect, perfect. Any other questions, guys?
I have a question. So, for the pre-construction buyers, for those who are looking to have letters for approval, like just to show it to the builders, what is the process for that? Do we actually have to qualify them, um, based on what they have right now, or they, according to what they told, they will have income in the future? So that's what I'm
So
trying to. So, for
different
example,
agents
I
and
have
go ahead.
So I have a client who's basically looking to buy a condominium, which is closing in 2026, right? And he mentioned to me that he will have 20% by that time, but he just needs to have like this letter to be able to confirm with the sale, right? So that's what I was trying to see if we have to take his future income to use it for pre-approval, as he mentioned that he would able to make that money, or we should just basically do it on the current state.
So I would 100% recommend fully putting together an application for your client based on, their 20% down payment. Even if they don't have the 20% down, you want to make sure that they qualify for the purchase, regardless of how much they have down, right? You want to make sure that they're prepared, whether that they can go A, B, private. You don't want to write a client an approval letter and then in 2 years they come back and you say, well, you're approved, but it's on the private side and you're paying 12% interest and you've got 4% fees, right? So it's really important to put together At minimum, an application for your client so you can see what their GDS TDS is, what their credit looks like. You can't give a client a firm approval at all. Now, some agents will write a letter on their letterhead and sign their name and say, so and so client has been pre-approved for a purchase amount of this much with a down payment of this much. That's some builders will accept it, some will not. In that case, you would need to do an actual pre-approval with a lender, but pretty much only A lenders do pre-approvals. First National Excalibur does a pre-approval on the B side, and you can't get a pre-approval from a private lender. So you really need to evaluate, put together the application at the bare minimum, and see exactly which direction the client's going, in terms of AB or private financing. Most builders I find would take a letter from you. You have to make sure that you include that this is not a firm approval, this is conditional, this is based on final underwriting, credit review, and document fulfillment, because you can put yourself in a sticky situation there if your buyer comes back in 2 years and all of a sudden you can't get them approved. But in theory, you should be able to write them a letter on your letterhead saying, these buyers as of this date are pre-qualified for a purchase of this amount with this much down payment, subject to full underwriting on approval.
Do you guys have like a sample of that letter which I could refer to, or is it something we can?
I don't. I can ask the brokerage and see if maybe there's something that we can put together for you guys to have access to as a resource. It just kind of has to be written correctly. So I can look into that and see if that's something that we can provide you guys. But I don't have a firm answer for you right now.
All right, that will be a good thing to do. So you can make a note of it.
Yep, I am making a note of that now, and then I'll talk to somebody after the meeting.
All right, thank you.
No problem. Anybody else? So has everybody watched all of the training videos thus far? Was there any sections in that you guys had questions on? Questions about, talking to clients, how to determine which documents to collect, income questions, that sort of thing?
So
Oh, sorry. Go ahead.
I have come across a scenario where a client who is looking to buy a house now, he got a job letter from their employer, and he mentioned that in November that employee is gonna get laid off, and then he had to find another job. So she is like an RN, like a registered nurse. So in this case, he mentioned that he want to buy a house right now before he lost his job. And so I was trying to see if we still have to disclose that in a note if we're trying to do a pre-approval that this guy may lose his job in November. It doesn't make any sense, but I think it's just good thing to consider.
Yeah, so obviously a lender is going to have a problem with the fact that the client's losing their job in November. Is this something that happens like regularly? Are they switching jobs often, or is this a job that they've been in long term that they're just now like losing essentially?
No, it just basically it is her first job, so she just became RN, and then the company she's working for is not basically, I don't know, they're laying off some staff or something like that, or maybe they're not uh operational. So she is easier for them to find a job. Like it's not a hard industry to get a job in healthcare, especially if you are a registered nurse, right? So
Yeah.
I think there is a good amount of job security if she has to move to another job, but based on what she have right now, and her husband, he is a like a truck driver, and he have his corporation, right? So that's why I was trying to find out like situation where we should wait until she find a new job, or we can just get her house now and like get a pre-approval going, and then eventually they can get another job, you know. Because you
So
never know at the end of the day, right? You can have
yeah,
you can close a house and next day you can lose a job. So
yes. So an A lender or B lender will not consider her income if they know she's losing her job in November, unless you had a 2-year interest or a 2-year average to show that she's, been consistently making hours. If she's had to switch jobs previously, it is pretty common for RNs to switch jobs because they're contract based or they're, looking to switch jobs for higher pay, that sort of thing. Because she's new in the industry and she doesn't have guaranteed employment beyond November, nobody's going to consider that income unless you go private. Um, my suggestion would be to either wait until after she gets a new job or tell her to find a new job now. Even if
Mhm.
she gets a new job, if she does not have guaranteed hours, nobody's going to use that income other than private. If it says she works on average or typically works this, 40 hours, 50 hours a week, if she doesn't have guaranteed hours or a salary, nobody is going to use that income without a 2-year average, which is tough. I know most of the time nurses will, work 50, 60 hours a week, but they're on an hourly basis with no guaranteed hours. You're going to have a difficult time finding a lender who's willing to accept that.
yeah, this is a funny situation where like they're making around $15,000 like bringing in cash in house like each month. But as this is her first job here, because she's an immigrant too, right?
Mhm.
So she doesn't have like 2 years of that same job history. So she just started making money right now, and they're just trying to get a house as soon as they can. So
My suggestion would be to have her look for a job that at least guarantees a minimum of 40 hours or puts her on salary um, to at least qualify for the mortgage.
yeah,
After she gets the mortgage, if she's making, a little bit more elsewhere, can get more hours elsewhere, that's one thing. She can go do that. But with less than 2 years history, can't take a 2-year average, no guaranteed income, it's really tough to find. Nobody on the A side is going to touch that, and you would struggle to find somebody on the B side who will take it.
mhm. Okay.
I
So
Yeah.
I
can
just
just
wanted to
add
like
a,
have an idea about this.
Sorry?
I,
No, that's
I
fine.
just
Thank you very
add
much.
a,
I just want go ahead.
I could just add a quick note that I run into when it comes to non non-guaranteed salaries and people working overtime is that you might actually need some lenders require 3 years of T4 showing how much overtime they consistently work based against their job letter guaranteed hours. So,
Yeah. Even if it's an exceptional amount of overtime, you're definitely right. They could look for up to 3 years. They might even ask for more. So it's tough in that industry because most of them work contract, not permanent, no guaranteed hours. So the best thing for your client would definitely be to find something that's permanent, full-time, guaranteed hours or salary.
Okay.
Any other questions?
Um, about the stated income methods.
Yes.
So I just need to understand what are the document requirements for the stated income method because they're just stating the income, right?
So stated
If we
income
use
on the
that.
B side, you need 12 months of business bank statements. And then you'll need to fill out the lender specific stated income declaration. And you'll need to provide typically 3 to 4 invoices that match deposits within the last 3 to 4 months of banking history.
Okay.
There could be more documents that are asked for. That's the basics. But, if your client is a contractor who's getting, I had a client who was doing work for embassies in Ottawa and they were receiving wires from the US for 50, 60, $70,000 or more. They made us provide the wire receipt for every single foreign deposit that they'd received in the 12 months. And that ended up being like 50 wire receipts, which was ridiculous in my opinion, but um, sometimes things like that happen. So that's why it's good to review your statements very thoroughly. and ask the questions up front before the lender does.
Yeah. And does it have to be more than 20% down payment for the stated income level, or we can still have a insured mortgage based on stated income?
So there is an insured stated income program. There's two actually. They're very difficult to qualify for. You have to be in business for at least 2 years. It works well for people. Well, it works well for people who are working in the industry previously on a salaried basis that have gone, working independently, self-employed. You have to disclose the net income or the total income from the previous year, and then you can reasonably gross up the income based on the industry. So it's not going to give you the numbers that traditional B stated income would. Maximum loan to value is 90%, so they have to have at least a 10% down payment. And there's an additional insurance premium on top of the insurance premium that would be paid normally. The credit score has to be good, the income has to be deemed reasonable, and they have to have no outstanding income taxes. So it's not an easy program to qualify for. If your client netted, say, $60,000 on their taxes, you're not going to get away with saying that they made $200,000 through the stated income program. You might get away with 100 if you're lucky, but it really depends on the insurer, the program you pick, the lender you're working with, and the underwriter that's doing your deal.
Okay. Now I was thinking to use the same for my client there, that I was talking about.
What
Husband and
type of
wife,
industry is it?
so it's a truck driver. He's owner operator and he's incorporated. He's working from last 2 years, so he's fine in that regards, right? And the wife is just RN, and I was hoping if that method can work, they can have 10% down payment and use the stated insurance method.
So for her, you wouldn't be able to use any of the income at all. So you have to be self-employed for the stated income, and she is not. For him, you could try it. It just depends on what he claims on his taxes, right? A lot of people write their income down or pay themselves so low, you know, like there are people out there who run businesses that gross $1 million and they pay themselves $25,000 a year. There is no way that you're going to get that stated income up beyond, you can't really increase it by more than 50% reasonably.
Okay.
Yeah.
Yeah,
So
that's
if
pretty
you
much
if
the
you
case.
need if you need that to get, if you're just there not quite qualifying, if you need an extra, $30,000-$40,000, it's a great program. Otherwise, it's not very good. Now, with your truck driving client, if they have 20% down, you can likely get away with a pretty high net income with a stated income program with a B lender that you may not need her. If you know what his gross income is, all you need to write off on his statements are his insurance and the cost of gas. Like that's basically it. Maybe a phone bill, or a truck payment if he has it. There's no employees involved. You don't need to include, marketing and advertising. There's no leases. There's no cost of goods. So if he's grossing $500,000, he might only pay himself $50,000, but you could probably get away with 250, 300 stated.
Okay.
Does that make sense?
All right. Yes, sort of, whatever I could understand. But that's
Okay.
a lot of information to process.
Yes, I know. The stated income is, once you put it on paper and you realize how it's done, it's actually super, super simple. You're just subtracting the expected or assumed expenses from the gross income to get the net income. So it's once you put it on paper, it'll be simpler to understand.
Okay, perfect. Thank you.
Anybody else have questions?
Yeah, so I just wanted to know how to acquire clients if I don't have a network.
So there's a whole lot of different ways that you can start getting clients. One would be reaching out to realtors in your area. So that can be through social media. You can get their phone number and call them. You can text them, introduce yourself, explain a little bit about yourself, what kind of products you want to specialize in. realtors are really big about the rate. So if you can emphasize that, you have connections to all the best lenders, you can get your clients the best rates possible. I find that realtors are normally very, very, very rate centric. They're probably more rate centric than their clients are, oddly enough.
Okay.
That's one way. Another way is reaching out to lawyers in your area. So real estate lawyers usually have a lot of leads, especially if they do a lot of private mortgages. Or, they'll get clients that have a mortgage, everything's good to go. And then a week before the mortgage happens, it falls apart. The bank cancels or a broker's messed up and made a mistake. If you can confidently introduce yourself, explain what products you can offer to them, what benefits you can offer them, whether you want to pay them $500 for a referral fee, whether you want to refer all of your clients to them so that they're making money off of your clients. That's something that you need to figure out. But lawyers have a lot of clients. Even if it's just a regular client says, hey, do you know anybody who can help me with the mortgage? My bank didn't approve me. Lawyers are very, very well trusted people. I find that clients usually trust what their lawyer is saying, and heavily rely upon the advice that they're given by their lawyer. And if a lawyer is referring a client to you, usually means that they trust them and they're serious about whatever inquiry they're putting in with you. So that's another one.
Okay.
Another good place to get leads, this is a little bit tougher, but from banks, you could reach out to mortgage advisors. So anybody who is a mortgage advisor for a branch is typically commission only, and they're trying to get leads as well. But they have the disadvantage of only having access to their own products. So they can't offer B products, they can't offer private products. And so many people go to the bank and cannot get approved. Probably, 2 in 10, 3 in 10 people can get approved by the bank when most others can't. Now they're usually going to want a piece of your commission. It can be 20, 30, 40% of your commission. If they're feeding you a lot of leads, it can definitely be worth it. Or if they're feeding you really big mortgages, it can absolutely be worth it. And they will have a lot of leads for you. It's just a bit more difficult to get in with them. I find you have to kind of schmooze them, because they have a lot of brokers that are reaching out to them, most likely.
Yeah.
But they have the ability to pass the clients off to you. They're allowed to do that. That's something that's really normal in the industry. So that's a really good place to go if you can, get in with somebody, even just one or two. It's a really good connection to have. Once your business, gets established and you have a couple clients, referrals from your existing clients can be a huge, huge, huge source of leads. If you make sure that you give your client a really good experience, you openly communicate with them from start to finish, you answer their questions, you find the product that they're looking for, you humanize yourself and make sure that you build a connection with them, they're going to be likely to refer you friends and family. It's people talk, people ask. Get them to write reviews for you on your Google, get them to write a review that you can post to your social media. It's a really great source for referrals. And then obviously social media, that's the biggest one. It's the one I find that most agents struggle with. Posting to social media is really, really important, especially now more than ever, because most people, they Google, they search on TikTok, they look things up online. And if you don't have a presence there, then they have zero chance of finding you, right? So get yourself a Canva membership and make yourself an Instagram and a Facebook, and get a picture, get a professional picture done, and just start posting on social media. It doesn't have to be anything fancy, doesn't have to be anything complicated. It can say, oh, guess what? The Bank of Canada announced that the rate is not changing. Here's what that means for you. What are the benefits of refinancing your mortgage? What are the benefits of a fixed rate versus a variable rate? What's the difference between a variable and an adjustable rate, right? There are so many things that you can just put out there that, one, shows the client that you know what you're talking about, and two, gives the client a place to find you and see you, post on other client testimonials, post about things that you're doing in your community, post about the brokerage, post about, you know, experiences that you've had closing mortgages. Like if you've had a difficult, like there are so many, you know, mortgage brokers and mortgage agents on TikTok that literally just go on there and talk shit about difficult clients that they've had a hard time with, and they get millions and millions of views, and all of their business comes from these little 2-minute long videos that they film, right? It's crazy, but this is like the new way of marketing yourself. So social media is huge. It's really important. And if you don't have social media, that's definitely something that you should look into.
Okay. Thank you for that. Okay.
No problem. I think that's all I can think of now.
Talking negatively about their clients.
Yes, literally. Yeah. So
Really? Wow.
yeah, they'll do like
Not
scenarios.
I would even.
It's very interesting to see how it's done, but they talk about fraud that their clients have done. They talk about their clients lying to them. They talk about it's huge, and there's so many agents and brokers that are doing it. If you Google like mortgage lender, mortgage broker, mortgage agent on TikTok, you're either going to get people talking about rates and stuff, or you're going to get people acting out their situations with crazy clients that have happened, and those are the ones that get the views. So it's an interesting way to market yourself, but it is surprisingly successful.
Yeah, I know that route. I definitely like to keep things positive and on track.
Yeah, I'd understand that for sure. Does anybody else have questions? All right, if that's the end of the questions, then I don't have any more material for you guys today. I think next week we may do like a quick run of private mortgages. I know most of you can't do them yet, but I think that it's a really good idea for you to be able to establish when a private mortgage will and will not work and what to look out for, so that when you do get those leads that need to go private and you need to refer them to somebody to work on, you at least know if it's a viable deal. You'll know what they're going to want. You can suggest a lender. You can, you know, find private lenders on Lender Spotlight, and you can say, hey, I think this is the client situation. I think this is a good lender for them, and pass it off to somebody who can do it for you. And then by the time that you are actually able to do private mortgages under your own name, you're going to be a pro, and it's going to be super simple for you, because in my opinion, they're much, much easier than doing them on the A or the B side. Finding a lender can be a little bit more complicated, but the technical work, like the underwriting, is very, very, very minimal. Most of it's just based on equity. So we can go over that. Another topic I want to do in the future is construction loans. So those are kind of part of private, but they do work a little bit differently. Lots of people are getting into building right now, despite the way that the market is, and lots of people are doing self builds too, because they realize it's more expensive. Well, sometimes it can be more expensive to hire a contractor. So we can definitely go over construction loans. If there's anything else that you guys want me to review, spend, you know, an hour on, I would love to hear about it. But yeah, that's kind of the end of the training today, if anybody doesn't have anything else to add.
Thank you, Jenna. That was good.
All right, no problem. Okay, guys, well, that's the end of it for today. I will see you all next week.
Have a good day. Bye.
All right. Have a good day.
Thank you. You too. If I can figure out how to, there we go.